One of the most important parts of trading is being able to manage risk. So if you're able to manage your risk, it'll help you cut down on your losses. It will protect your account from losing a bunch of money. The risk occurs when a trader suffers a loss. If it can be managed, the trader can open him or herself up to making money in the market. It's an essential but overlooked prerequisite to successful active trading. After all, a trader who has generated substantial profits can lose it all in just one or two bad trades without proper risk management. It's important to have a plan when you go into each one of these trades. One thing I see a lot of people doing is they're opening up long positions right now. They're buying against the trend. Remember, the trend is your friend. You always want to buy with the trend, especially in long positions. If you're trading, it's important to plan your trades out. You want to go into a trade and you want to have your stop loss set. You want to have some points where you're going to take profits, where you're going to close your position. You have to have a plan. Emotion's going to kick in when you're trading, and things will turn out a lot different if you don't have a plan going into this. So every battle is won before it's fought. You have to plan the trade and trade the plan. It's always important, like I said, stop loss and take profit points. They represent two key ways in which traders can plan ahead when trading. Successful traders know what price they're willing to pay and what price they're willing to sell. Unsuccessful traders often enter a trade without having any idea of the points at which they will sell at a profit or a loss. Like gamblers on a lucky or unlucky streak, emotions begin to take over and dictate their trades. Losses often provoke people to hold on and hope to make their money back, while profits can entice traders to continue to hold on for even more gains. How many times in crypto have you heard, well, I'm already down this much, I got to continue to hold till it turns around. So that mentality has to be changed. You have to know when to take a loss. Consider the 1% rule. And this is another rule that a lot of people don't follow. Commonly, I don't follow it. The rule suggests you should never put more than 1% of your capital or trading account into a single trade. 1%. So if you have a $10,000 portfolio, you're only trading with $100. It's common if you have an account less than $100,000, you may even go as high as 2% on an individual trade. Really, in this market, you shouldn't be trading any more than 2% right now. If you're trading any more than 2%, if you're making a ton of money, keep doing what you're doing. But if you're losing money, you got to learn this market. Now's a good time to learn. I wouldn't be taking a whole lot of risks. I mean, obviously, there's exceptions to this. Now, as the size of your account increases, your position size is going to increase as well. Because obviously, the 2% of 100,000, and then you grow your portfolio to 200,000 or 300,000, obviously is a lot more money to work with. Stop loss and take profit points. No real fixed percentage where you want to put your stop loss below where you're trading at as far as the price point goes. So a stop loss point is the price at which a trader will sell a stock and take a loss on the trade. Now, it's really important. You have to learn resistance and support. You're always going to want to put your stop losses below some major support. That's might be a moving average. This article talks about, find a major moving average, the 5, the 9, the 20, the 50, the 100, or the 200 simple moving average. Right now, and I'll show you in just a second, Bitcoin's found some support on the 200 moving average. Take profit points. It's a price at which the trader will sell a crypto and take a profit on the trade. Whenever you're approaching key resistance, and this is like we talked about, this is important too. You got to be able to mark your resistance levels. If the price action's reaching a point where it's going to be harder to break, there's a good chance you'll see a pullback. Other people are going to sell and take profits based on the same thing. So if you don't take profits, they will take profits from you. So you want to sell possibly before this consolidation takes place. You don't have to go all in on these trades. It's not you chunk a bunch of money in on a trade and just watch it. You can scale in, put 25% of the amount that you're going to invest, put 50% maybe, and then put the rest in the other 25% in the trade. You kind of scale in, and then you scale out. It kind of averages out your price points is where you buy in. You just have to find something that works for you, and if you don't practice, then you're not going to get any better at it. Like, part of learning and part of this group is making mistakes, but you're making controlled mistakes where you're not putting $100,000 in one of these cryptos. You're not buying the top and hoping it's going to go higher. So I really, every day I want to focus on kind of making sure that you guys realize that these habits that I think that YouTube is kind of built in. YouTube really has caused a lot of problems for people trying to enter this market. I think the hype cycle and was going crazy on YouTube. So basically, and I have people in the group reach out like, I'm confused, I don't know what to do. Listen, probably the best thing to do is the opposite of what everybody on YouTube's talking about. So you just have to go against the herd mentality. So you're having to do things, and the reason why this doesn't come easy to you is because you're number one, your emotions, which you have to be able to disconnect. Number two, everybody else is talking about, hey, do this, do that, do this, do that. They're wrong. 9 out of 10 times, everybody else is wrong. This market is made to take money from everybody else. You don't want to be one of those people. So you have to do your own thing. Diversify and hedge. I would not go all in on XRP or Bitcoin or Ethereum. I would spread out your risk a little bit. I mean, Bitcoin's a name in the face of cryptocurrency. You definitely want to own some. You know, it's not going to see the biggest gains, but it's not going to see the biggest losses either. Also, the chance of Bitcoin failing, if Bitcoin fails, the market's in trouble. You know, you just keep in mind that you got backed, ErisX, all these ETFs. Like, these guys are coming in, these institutions, the smart money, they're coming in and they're going to buy Bitcoin first. They're going to go straight to Bitcoin. They're not going to skip Bitcoin. Okay, so you just have to understand that. In the bull run 2017, Bitcoin went up and the alts didn't move or went down. Then when Bitcoin got to 20,000, everybody sold their Bitcoin and started buying alts again. So again, it's important to diversify, spread your money out a little bit. Hodling in this market is okay. It works if you're busy, understandable. However, I think if you got some money on the sidelines, you probably want to continue to wait a little bit. You know, if we move to the upside and we get a good break out of this triangle, then you want to open up position. If we break to the downside, that's going to be a lot of losses that you missed out on, which is obviously the goal here. So you really have to plan your trades out, take some time. I know it seems like, you know, at first I talk about this and people think, oh, well, you know, that's a little bit too much, or I don't know how to do it. But unless you practice it, just think about how many things in life that you didn't know how to do, but you did it anyway, and you made a lot of mistakes and you failed at it repeatedly. And that in the end, because you continued to do it, you learned how to accomplish your goals and you overcame it. And trading is the same way. It just is frustrating. The key is you have to know when to take a loss. The best traders know when to take a loss, close a position, and start over. So here's what I was talking about with Bitcoin. So this is the 1 hour chart, BTC USD. This is the 1 hour Bitcoin USDT chart. So you see we found support here on the 200 moving average. And you can see that Bitcoin is starting to follow this. So I really want to see some volume down here for a breakout of the triangle. So I might have to adjust the triangle out here a little bit, which is probably what will happen if we get a pullback right here. So probably not much of anything, but hopefully, again, if we can get a breakout here, this will set the tone for the next 2 to 3 months. We need a break. The bulls need a breakout to the upside here. We need to start making some money. It's tough because in the group, you don't want to force a bunch of these trades. I don't want people to lose any more money than they have. There's a lot of risky trades out there that may or may not work out. A lot of these bullish setups are not playing out like they would. This is going to get so much easier. That's why I just encourage everybody, just keep practicing, keep posting charts. So you've got to take advantage of the resources that you have in the group. Again, as always, I want to thank everybody for your support. I'll talk to you guys tonight. We've got Discord. Hope to see you then. Take care.